All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream, September 14th, 2021. Today during this live stream, I'll give a market overview going through the S&P 500, the NASDAQ, IWO, and ARK, break down my current portfolio, go over 20 stocks that I have on my watch list for the second half of the week, and then also break down any stocks that you guys want to see. So I have about 6 stocks that you guys have brought to my attention from StockTwits and Twitter. But if there are any other stocks that you want to see during the live stream, just leave them in the chat and we'll get to as many as we can in the hour. So we're going for about an hour. If you're watching this live stream after the fact, I'll put timestamps for any of the stocks that we talk about in the comment section below. So go to the comments, make sure you get what you need out of the video. If you enjoy the video, please leave a like, subscribe to the channel. I do this live stream on Tuesday nights usually, sometimes on Wednesday if it's a shortened trading week, and then I do a breakout watch list on Sunday morning going into the week. Make sure you follow me on StockTwits and Twitter. That's where I post the most often, but also getting going on Instagram and TikTok. Quick disclaimer, anything that I talk about is not financial or stock advice. This is all for educational purposes only. Trading comes with financial risk. Please do your due diligence before trading, especially now with the market that we're in. Quick look at my portfolio. Right now I'm 100% hedged, so long positions I have DoorDash, put that twice, Mttr, Zim, Amba, and ALGN. All the money that I have invested in those stocks are hedged with either SQQQ long or RK short. So right now I'm not trying to get aggressive. I'm trying to hold on to winning positions that are holding better relative strength than the rest of the market. And we'll break down some of the market charts in a second here, but I want to go over the watch list that we have, 20 stocks for you. We'll be going over the fundamentals, the setups, and possible buy points to each of these. So don't want to spend too much time on this chart. And then also the stocks that you guys requested. Here are the 6 stocks that I got on StockTwits and Twitter. So if you don't see your stock here, make sure you drop it in the chat and we'll get to it. All right, let's get started with the S&P 500. Not soy, SPY. So you can see last week we started pulling back to the 8-day. We slipped the 8-day exponential moving average on the 8th, I think that was Thursday. Friday, we had that nasty close going into this week. We gapped up on Monday. We sold down through the 20-day moving average. And then that was Friday, excuse me. On Monday, we gapped up and then closed down under the 20-day moving average. Again, today, on Tuesday, we gapped up and then we sold down to the close, down about 0.5%. Now, we're pulling back to the 50-day simple moving average. That's this red line. And there's actually a decent amount of support. Need to put on the volume profile here. There we go. Get a look at some possible volume support. But for now, that 50-day simple moving average, that's around 442. Let's see if that holds. But one thing that's really apparent is we keep on opening strong and then fading during the day. And that's kind of the opposite of what you want to see, because if you're buying stocks, you're buying through a breakout point. And then if everything's fading late in the day, any new positions you're putting on this past 4 or 5 days, unless it's extremely strong, like relative strength, it's probably giving you a loss going into the close of the first day that you're holding it. So not a great time to be putting on new trades. Any new trades that I put on today that were negative at the close, I just took off because, I mean, this obviously is not working right now. The market's showing some weakness. NASDAQ, QQQs, you can see pretty big selling volume as we come down to the 20-day moving average. It's holding up better than the S&P 500. We do have a good volume shelf right at the 50-day simple moving average. So if we pull back, that's another 2% to that area. I mean, that's probably what I, as being fully hedged right now, would like to see. Let's just flush the deck out, wait for a week or two, have things set up, and then start trading aggressively into the end of the year. Right now, we're just kind of like teeter-tottering on that 20-day moving average. We'll see if that closes down. Next, we have IWO. This is the Russell's 2000 Growth ETF. So this typically tracks the stocks that I trade as a swing trader, breakout trader, whatever you want to call it. And you can see last 3 weeks or so, we had a good 10% move, nice uptrend there. A lot of breakouts were working, was able to get money through pivots, put the stops to our entry points, take the risk out of the trades. And unfortunately, since, let's see, the second, we've pulled right back down to, man, that's converging the 20, the 50, and the 200-day simple moving average along with that volume shelf. So we're kind of in do or die mode for the IWO right now. If this continues and pushes lower, that definitely time for caution. So not trying to be aggressive with anything that I'm doing here. And when I'm going over the 20 stocks that we'll be covering, these are just setups. I'm not planning on taking all of these trades, obviously, but I'm also looking to trade pretty conservatively until we see IWO turn up and ARKK turn up as well. Right now, it looks like we could be breaking below the lows here, under the volume shelf, a lot of resistance up top. All right, so that was the market update. Let's go through the watch list. First, we'll start with the MarketSmith chart, get some fundamentals on a name. ACLS. So first, group strength, A-, 47 out of 197. Within that group, it's the 9th strongest out of 32 stocks, so only about top quarter there. Overall composite rating, 94, and relative strength, 94. One thing that I required for the 20 stocks that we'll be covering today is the relative strength rating for MarketSmith is going to be above 90 for every single stock. I don't want to be dealing with losing stocks or weaker stocks, especially while the market's weak. I want only the strongest stocks because as the market's been pulling back, there's been a very few, even since March, there have been a very few number of stocks that are actually breaking out and holding. But even now, the market breadth is weakening and weakening and weakening. So if you're not focusing on the very select few of stocks with the best relative strength, chances are you're going to be taking some losses. So everything we covered today, relative strength rating over 90. Earnings per share, very strong, 4 quarters above 40%. Sales, 59, 13, 12, 20, and after-tax margin increasing by about 12% per quarter. Fund ownership increasing June 335 to 401. We did decrease a little bit the last quarter, but nothing too crazy there. Let's go ACLS. Yeah, so here's the chart to find a better entry point. This is showing the after hours. I hate that it does that. But we have this nice cup putting in a handle, and you can see volume is lightening up. Average true range, ATR, that measures the daily candles, that's lightening up. So as this consolidates, we also had a break under the low. You can't really see it here, but 50.01 was the low in the pullback. Then we undercut that with 49.25 yesterday. So looking at a break over Friday's high, it would be 49.86, or just a break above 50 would be a possible buy point for ACLS. All right, next we have Amba. This is a stock that I currently own for full disclosure. Group strength, A+. Within the group, it's 6 out of 29. That group is ranked 4th out of 197. So obviously, strong group, strong stock in the group. Relative strength rating, 96. Composite rating, 98. You can see it popped on the earnings per share with heavy volume. Earnings per share was up 483% year over year. Sales were up 58%. And after-tax margin up 16.6 during that last quarter. Fund ownership also has been increasing. We go from 347 to 458, for AMBA. This, what I'm looking at here, I'm hesitant to add to the position, but it broke out, had this nice consolidation area through here. Didn't even consolidate to the 8-day. So that's how fast these very strong relative strength movers are going right now. But I put the trade on with a break over this area, sold some into strength, so now I have my stop even. I have a profit on the trade, but 2 days with very low volume as it's trading sideways, holding good relative strength, break into the high here, could be an add spot, and it's 149.95, a round number break of 150. could be doable as well. The more this trades sideways and tightens up, the better the trade gets. So if it trades sideways Wednesday, Thursday, and then Friday it gets going along with the market rebounding, even better. But AMBA. Next we have BILL. This is a trade that I tried today, was not up at the close, so I just closed out the trade for now, looking to put it back on possibly tomorrow. We'll see. Group strength A, 24 out of 197. Within the group of 36 stocks, it's ranked 5th out of 36. Composite rating, 79, so not super strong. It's because that earnings per share rating is only 16, has negative earnings per share right now. Relative strength, though, 98, doing well there. Fund ownership also increasing, went from 340 to 564, about an 80% increase there. So let's take a look at what I'm trying to find as an entry point. Mike, I see your both of your guys' comments. We'll take a look at MITC once we get to the requested stocks. So BILL had that earnings pop. Nice move on there. We had a pullback. This could have been buyable, the 2-day pivot through here, but we pulled back again, flushed under the low, and I put the trade on as we broke over yesterday's high. Didn't get like the exact fill, so I was a little bit above the price going into the close today. You can see it got out, was looking good, and then it squatted back, and I took it off for, I don't know, down 0.25%, something like that. With this, it's holding up relatively well. We had a nice quick flush in reclaim yesterday, or not reclaim, but we got right back up to the 8-day exponential moving average yesterday. Looked like we were getting out today, pulled back in. So as this kind of trades sideways, it's a name that I want to keep an eye on for, but a break over today's high, 291.19 is a possible buy point for that one. BILL. Next we have Datadog. This one has been super frustrating to trade. Similar with BILL, had a nice earnings pop, so earnings was plus 80, sales were plus 67, after tax margin plus 14%. Group strength is A, it's 18 out of 197. Within that group of 106 stocks, it's the 14th strongest stock. Composite rating 93, relative strength rating 93. You like to see those two 90s together. Fund ownership also increasing, went from 575 to 996, so about a 40% increase there. Let's jump to the chart. Whoops, wrong way. So for Datadog, DDOG, we had about a 20% pop on earnings. Just kind of drifted higher here. I was seeing this upper wedge, but we shook underneath the lows and closed high. I took a trade through here. It got out, sold some to strength, and then flushed me out for a, 3% loss or so. Since then, it did bounce, closed right at the 20-day. Today, it was holding good strength, up 2%, and we have a 2-day pivot along the volume shelf right here and above the 8-day exponential, 20-day simple. Something to look at. I don't know if I'm going to be taking the trade again because it would be the third time that I take this one, but it's holding up relatively well, has good fundamentals, so don't want to deprive you guys of it because I've traded it a couple times, but DDOG, Datadog. Next, we have DDS. This one, group strength rating A+, 3 out of 197. It's the second strongest stock out of 6 there. It's been a monster in 2021. Composite rating 94, relative strength rating 99. Earnings per share, plus 522, plus 27, 184, 887. Sales up 70% the last quarter, after tax margin up 11.6. You have fund ownership also increasing, 318 to 351. Not super fast there, but still, keep doing that on the right way. So here, zooming out, you can see this monster move. You got the 200-day, 50-day, 20, and 8 all in the right order. This is consolidating nicely after the earnings here. I do believe we undercut the low in the first pullback after earnings, so you like to see that shake out. Another pullback, tightening up, and now you have kind of a 4-day pivot right through here with a break over today's high, 202.75 as a possible buy point for DDS. All right, next we have DKS. Whoa, what's going on? DKS, this was on the breakout watch list, so don't want to cover this too much, you guys can check that video out. But relative strength, A+, 15 out of 197, number 1 stock out of 14 in that group. Accumulation distribution, A, composite rating 99, along with a relative strength rating of 97. Earnings per share up 58%, sales up 21, after-tax margin up 15, the last earnings call. Fund ownership also increasing, 589 to 807. And with this one, a lot of the stocks that we're covering here are kind of earnings pop and now consolidating. You can see this, we pulled down, I think this had to do with a special dividend. Look into that, but I think it was a special dividend here, so part of that is the dividend pulling down. Now we're consolidating here. You got the 20-day moving average moving up. It's getting sold on that 8-day as long as it's popping to that. What I would be waiting for is actually not so much just a break of the past 2 days highs or 4 days high, but to get over the main part of this volume shelf at 135.70 area, just so we can clear some of the resistance and actually prove that we're getting going before buying the stock. All right, that was DKS. Next we have DLO. This one has been super frustrating as well. Shook me out yesterday and then popped, but don't want to take that away from you guys. Group strength, A-, accumulation distribution, B+, composite rating 98, relative strength rating 98, industry number 1 out of 38. The group is 46 out of 197 there. Earnings per share, last 4 quarters, 50, 300, 500, 100. Sales, 96, 94, 124, 186. After-tax profit margin, 30% or above. So very strong there. On the chart, we have this nice earnings pop through here, about 46% move there. We consolidated. I did take this trade through here, made some money on that, 13% move. But since then, we've just pulled back and done so on lighter volume to the 8-day or 20-day simple moving average, consolidated there, but then flushed yesterday under that low. So that's where I got stopped out. And of course, right after that, it reverses. We get right back above the 8 and the 20-day moving average. With this, I would be looking for a break over today's high, 65.24. That would also get us over the main part of the volume shelf here, so less resistance if we move up. To be a little bit more cautious, you'd be waiting for a break over 66.25, the high from Friday with DLO. If you guys are enjoying the stream, please leave a like and subscribe to the channel. Helps me out tremendously trying to grow this thing. All right, next we have Gamestop. Kind of a shocker, right? There's not too much fundamentally to go over here. So actually we'll just jump to the E-Trade chart. This one is setting up, has a change of characteristics lately with good volume on the way out and then lower volume as it consolidates. Did flush a little bit on earnings, but recaptured, bounced at the 50-day, moved back up on higher volume, consolidated, moved on Monday. We have a nice consolidation day today. This is one with obviously a lot of pop power to it. Couple different ways to take the trade. Break over today's high, that would get you your tightest stop of about 4%. Otherwise, you're going to be using a kind of an arbitrary stop loss of like 5% or so. And I don't want to, there might be some resistance selling into that area. So one strike against the setup, but wanted to put it on the list. A lot of a momentum name here that might not kind of correlate with the market. So if the market's down, maybe this gets squeezed a little bit. So that's GME. All right, let's go HUT. This has to do with cryptocurrency, so obviously that's been relatively hot lately. Group strength, A+, accumulation distribution, A+, composite rating 96, relative strength rating 98. In the group, it's 6 out of 51 stocks, and we do see a slight uptick in fund ownership now, so that's nice to see. No real earnings per share numbers to show. Sales has been increasing, but I don't know if I trust those numbers too much. Let's find an entry point for this guy. We got HUT, really strong relative strength lately. You can see it's got that nice cup, putting in a little bit of a handle here. Oh, it's down 12% after hours. Scratch that, never mind. Did not see that while I was putting together the list. We don't want to be trading any weak stocks right now. All right, IRNT is next. This has to do with cybersecurity. That's been a really hot sector as of late. Group strength rating, because of that, A+. It's the 7th group out of 197. Within that group, it's about midway. Composite score, 19 out of 37. But relative strength, because it has a RS rating of 98, it's the strongest out of 37 there. Accumulation distribution in the stock, A. Composite rating, 97, just because it does not have any earnings to show. Fund ownership, also just kind of staying steady there. So this really is a momentum play with that. IRNT, let's find an entry point. It's up 5% after hours. So this is showing the after hours price. Let's see, 23.32. It did get over yesterday's high. I was looking for just a break over today's high as a possible buy point, but you're going to have to use an arbitrary stop loss to keep your risk in check on this one. It also trades pretty quickly. So if it works, it's going to have to work right away for you. If you get in and the stock's just kind of meandering around, it's not worth the risk, especially in this market. IRNT. Next we have LAC. This is forming a nice cup. We'll put in a handle here, or is it just going to break out? We'll see. Group strength rating, very weak, D+. But lithium has been hot within that group, so hard to say there. I went off the relative strength rating, 98. Accumulation rating, A as well. With this one, fund ownership also increasing, but there is definitely some strikes against the chart. So nice cup, has that change in characteristics after the base, huge volume coming out, pretty big volume coming back in that first time again, but as we creep higher, big volume days out, lower volume days as it pulls back, and that trend's continuing. I think we have just a nice kind of like flat top right through here. So we have 1, 2, 3 days highs right at the same price. Ideally, this checks back, and this is something that we put on the watch list for next week. We put in a handle here, but sometimes the strongest stocks aren't going to give you that last shakeout. They're going to just keep roaring. We did have this most recent pullback where it did check back to that 8-day, and then the next day it got going, so that was an entry point. We'll see about that one. LAC, but really good volume, really good relative strength, and we're coming up to kind of the pivot of the bull. So want to keep some alerts on that one. But again, this is a name, because it's so relative strength based of the trade or momentum based, if it doesn't work right away, if you don't see big volume coming in through that pivot point and you're the only one buying the stock, not worth the risk. Move your stop to your entry almost immediately, or keep your stop as tight as possible. That's how I'm trading in the market. You guys can do whatever you want, obviously. No financial advice, but we got to manage risk if we're going to be consistent with trading, especially in this market. That's LAC. Next we have MDB. This is another earnings pop that's kind of consolidating, holding nice relative strength. RS rating 96. Group strength B+, 49 out of 197, and it's the 11th stock of 26 there. Accumulation distribution B+, solid there. Composite rating 75, definitely a strike against the chart because it doesn't have any positive earnings to go off of. Fund ownership has been increasing, 777 up to 1062 there. Let's find an entry point. It's going to be the break over today's high, but we did have that nice move on earnings, plus 30% on huge volume, pulled back, had that nice consolidation day right through there. But with the market, it's been choppy. We pulled back and then was looking for a break over here as an entry point. I didn't take it because it was towards the end of the day, and I was cutting exposure, not increasing exposure. But if this can trade sideways Wednesday, Thursday, and then we take out that high on Friday, that could be a possible entry point. I just want this 8-day exponential moving average to catch up a little bit, especially with the way the market's been acting. But up 4% on a very tough day. We undercut the low of Friday, but then rallied to close relatively high on Monday. So showing great relative strength on this one, MDB. Next, we have the spotlight stock of the night from yesterday's YouTube short is MIME. Group strength A+, Accumulation distribution A, composite rating 97, relative strength rating 91. You have the second strongest stock out of 37 in that group, and fund ownership increasing from 362 to 419, checking a lot of the boxes, which is why I went with it for my first YouTube short. Earnings per share was up 45% year over year, sales up 24%, after-tax margin up 15%. Obviously, very strong fundamentally. This one does trade relatively thinner, so position size accordingly. I did try this trade with a break over yesterday's high. Because it was closing red, I took the trade off just to protect myself against overnight risk, especially in this market. But a break over today's high, 69.62, would get us close to that volume shelf. And we have kind of a 3-day pivot right through there as a possible buy point. Very low volume today as we kind of just pulled back. So MIME, definitely one to watch for, but a little bit thinner if you don't trade thin stocks. We got 6 more for you. NET. This was a stock that I got stopped out of yesterday, but group strength A+, it's 18 out of 197, 23rd stock out of 106 in the group. We have nice fund ownership increasing from 327 to 985, almost triple your fund ownership within the last year. Composite rating 89, relative strength rating 97. Earnings per share still negative, but sales growing at about 50% year over year. Let's find an entry point on this guy, NET. So I bought it as it was coming through this area with tons of volume on the first. It got out, sold some into strength, and then we flushed under and hit my stop at even yesterday. And we pulled under the 20-day, but we closed right above. Today, what was the chart that was similar to this one? Bill? Yeah, B-I-L-L. Nice flush. Looked like it was getting going and then pulled back with the market weakness. So with this, looking for a break over today's high, 128.94 is a possible buy point. All right, let's go back. PWR, I haven't seen a lot of people talking about this one on StockTwits or Twitter, but earnings per share rating 94, accumulation distribution A, group strength C+, so maybe that's why they're not talking about it, 98 out of 197, but it is the strongest stock in that group of 20. Composite rating 93, relative strength rating 94. We do have that pop, nice consolidation while the market's been weak. Earnings per share, last reported, plus 43%. Sales up 20% and after-tax margin up 5. PWR, also a thinner traded name. Let's see, I don't know, about a million shares traded each day. Let's measure from the bottom of the cup here. So 38%, not the quickest mover, but I mean, you can't argue against that relative strength. It's holding that area nicely while the 8-day exponential moving average comes up. Good lower volume pullback days versus the green days getting heavier volume. ATR is starting to come in, and relative strength compared to the Qs is actually increasing. Break over yesterday's high, 117.19 is a possible buy point on that one. PWR. Next we have SGMS. This was on StockTwits a couple days ago. Someone brought it to my attention, but really nice VCP pattern through here that we'll cover in a second. Group strength B+, 61 out of 197. It's the 11th strongest stock of the group of 29. Accumulation distribution B, composite 78. Nothing really to write home about there, but relative strength 95. Earnings per share up 151% year over year. Sales up 63. After-tax margin up 12%. Fund ownership gradually increasing from 322 to 433. So that's what, about 33% increase year over year there. SGMS, so VCP pattern. This is what Mark Minervini calls volatility contraction pattern. You have strong pullback, 29%. You have a second pullback from high to low, 11%. Kind of a third pullback, this might be 8%. Fourth pullback, 5%. So each of those pullbacks are getting lighter and lighter. One thing I don't love about the chart is some of the heavier volume days are on down days, so that's definitely a strike against the setup. But we did have this kind of 3-day pivot that we broke today, on a tough day. So what you could do is look for a break over today's high, which will get you over the main part here, 75.21. Let's see if we broke that. 75.45. So break over today's high, 75.45 would be a possible entry point. You're then above the main part of the volume shelf there, and then zooming out, you see a nice uptrend. You got the 200, the 50, 28, all in the right order for SGMS. Next we have SKIN. Could barely read my handwriting. This is definitely a momentum play. Relative strength rating 98. Good fundamental fund ownership increasing 41, 55, 144. Group strength B, 80 out of 197, 14 out of 33 in the group, but it does have the strongest relative strength in that group. So again, it's a momentum kind of play. Composite rating C, or 73, just because earnings are still negative. This one, SKIN, has been a monster in 2021. Let's see, it ran all the way 185% since May. We since pulled back 16%. I want to say there was an offering. Don't quote me on that. I need to check that. But it immediately bounced back on Friday. Looked like it was flushing. Someone bought it back on Monday. Today, same thing. Looked like it was flushing. Got bought back up. Stays above that 8-day exponential moving average. So every time this flushes, someone is buying. And the buying is relentless on this. So looking for, you could do a break over today's high, 26.36, but a break over Friday's high, 26.56, would clear that pivot. The downside to this setup is because of those long lower wicks, you're not going to keep a 7% stop in this market probably, so an arbitrary 3% stop is going to be your move there with SKIN. We got 3 more for you, STVN. Before we get to the requested stocks, similar, just a momentum move name, 95. Group strength B, 71 out of 197. It's the 4th strongest stock out of 42. We have no fund ownership right now. Pretty good earnings per share growth though, 150, 175, 350. Sales up 46, 48, 50, 33. After-tax margin around 14% increase year over year. Let's go to the chart, STVN. What was the average daily volume? Over 1 million on this. Really good relative strength today, obviously. Let's see, 44% move up. We've pulled back 12% since that move. Consolidating a lot of longer, lower wicks. So when it does flush, people are bidding it back up towards the end of the day. Same thing with today. We gapped down and we closed at the high. So full green candle there. You like to see that on a tough day in the market. With this, you could take it with just a break over today's high if we open lower and then take it out. So that would be 27.05. Otherwise, a break over 27.27, the high from the 10th would do. STVN. SWCH, Swch. Group strength C, it's 117 out of 197. Within that group of 15 stocks, 2nd strongest. Accumulation distribution B, and relative strength 94. We had that nice earnings pop. We pulled back to the 20-day, got going, consolidated. That was a nice buy point right through there. I did not take that, unfortunately. But we are getting another pullback to the 8-day exponential moving average and consolidating there nicely. Let's check fund ownership. I'm not sure about this one. Yeah, kind of declining. Definitely a strike against the setup there. Let's go SWCH. Yeah, so we had that earnings pop. What was that? 27%, but it sold down on the day. So no surprise that it kept moving lower. We had a consolidation area right through there, and then since then continues to move higher, 13%. So not a super fast mover, but holding up relatively well, 4% off the highs. And we do have 3 days consolidated. So a break over today's high, 26.36, 26.37 is a possible buy point for this one. Lower volume as it flags out, which you like to see, and look at this one red candle. Yeah, similar right through there. I look back at the chart trying to learn from my mistakes, and that nice consolidation area right above the 8-day and then getting out the next day. that was a buy point. SWCH, and finally we have Upstart. This one might be a bit too extended, but it is kind of the leader in the market right now. So I partly put this on because it is consolidating right at the 8-day exponential moving average, but partially because if this goes, like if this flushes, the market's definitely in for some pain. Fund ownership, 53, 151, 229, exploding, relative strength, 99, group strength, A+, accumulation distribution, A, composite rating, 99. I mean, this is the strongest stock in the market right now, Upstart. Last earnings, over 1,000% earnings per share growth, over 1,000% sales growth, 30% after-tax margin growth. Like, as much of a monster as you can get. So let's see. From earnings, it has popped 111%. From the high, we've pulled back 11%. Ideally, this flags out for another couple weeks, allows that 20-day moving average to catch up, and then we can catch it on there. It's holding up so strong compared to the market. Continues to break out, 27% move after that consolidation area. That should have been an ad spot. Man, I'm kicking myself because I was selling into that move instead of getting in more. But yeah, something to learn from the chart. So if this one breaks down, it does have a ways to go, 13% to the 20-day moving average. So if it breaks down, the market's definitely in trouble. If we can consolidate in the second half of the week, towards Friday, a break over today's high, 282.25 is a possible buy point. All right, let's go to ALEX. These are the 6 stocks that you guys wanted to see. Actually, hold on. Let me jump to what you guys want to see in the chat if you're still here. MITC. Ooh, relative strength rating 3. 13 out of 14 of the stock in a D+ group strength rating. Yeah, not something that I would touch with my trading strategy. Can you find a bottom in a stock? Sure. I'm terrible at it, so I always look for the strongest stocks that are getting stronger, not weak stocks that are trying to bounce a couple percent before they hit some selling pressure. Fund ownership, very little funds. Yeah, let's check MITC. Not a stock that I would want to be buying here. It's up after hours. Oh, okay, so that's why. So we'll see what's going on. Is this earnings? This was a requested stock, so I didn't come prepared for this one, obviously. But above the 50-day moving average, you still have a huge volume shelf up top. Possibly a momentum play, kind of change of characteristics with this one. I'll write this down, kind of do more research on this after the call here. But MITC, we'll see. Let's see. Recent IPO, PR after hours. Yeah, we'll see about this one. ATER. Ooh, down 40% today. Yeah, tons of volume on the way up. Because it's under the 200-day simple moving average, I didn't have this on my radar at all. But really good volume coming off the lows here, 443%. Yeah, I mean, this chart's definitely going to need work for the low risk trading that I'm trying to do. I haven't seen any news about this, but let's see, ATR, TMC. This IPO today. Yeah, I don't, let's see. Oh no, a couple days. Why did that? Let's check this. TMC. Let's see what you said. Despocked, okay. Yeah, that's gonna mess up the chart really. 74%. Yeah, I mean, this one doesn't fit my trading strategy, so I don't wanna kind of weigh in. It's under the 15-minute moving average, so yeah, I don't know. I don't wanna give any bad information on this, not something that I've been focusing on, so don't wanna call it out here. GLBE, yeah, this one tripped me up as well. I had this in kind of like my longer term account, bought in on this nice consolidation area right here, got out, was up 20% immediately, so I was really happy about it. was consolidating and then flushed, consolidated, flushed, and then eventually it hit my stop at my entry, so I got out. But this is starting to drift higher. We're above the 50-day moving average again. But after this kind of move, let's see, after a 25% move down, we've bounced 12%. Is this going to see some selling for the short-term buyers that got in here, especially on like weaker tape? Let's see. So above this main part of the volume shelf, above the 20-day moving average, it definitely gets interesting. But I would like to see just a quick check back before getting going again. But it is back on my radar, getting back above the 50-day moving average. It looked like it was selling off on huge volume under the 50, so that's why I kind of scratched the idea for now, but we'll see. Glbe. All right, let's see. It's important to note that iron 2. Just reading your guys' comments right now. ALF. What happened here? I don't like that. Taking more personal identification using AI. Accumulation distribution, A-, group strength, A+, computer software is really strong, 6 out of 197. Yeah, the way I trade, I mean, these aren't the stocks that I go after, so I'm not going to be, like, I don't want to give you bad information. If you have a different trading style than me, that's perfectly fine, but I don't trade stocks under their 50-day moving average, personally. All right. PAG, let's check it out. Penske Automotive Group. All right, so group strength D+, pretty weak there. Earnings per share, 95, that's good. Accumulation distribution, B-, composite, 94. This is a beautiful chart. Ooh, thanks for bringing this up. I mean, group strength is weak, but it's the second strongest stock in that group. Fund ownership steadily increasing. This is a beautiful VCP pattern. Earnings, 99, 99, 240, 698. Sales, 0, -1, 15, 91. Really strong there. PAG, here we go. Let's do some measuring. 22%, 9%, 6%. You have that nice pivot, 3-day pivot right there. Beautiful chart. Thank you for bringing this up. Writing this down, PAG. Exactly what I'm looking for. You got the 200-day in an uptrend, 50, 28, all in the right order. We're above the main part of the volume shelf. Yeah, all good things. Great call out on this one. Who called that out? Let's see. Michael. Thanks, Mike. All right. I just find it funny that you had IR and T on your watch list. Yeah, this one's just showing better relative strength, more of a momentum play, above all the key moving averages. So out of the two, I want to be trading the stronger of the two stocks, if that makes sense. All right, let's go. Let's get back to the 6 stocks that StockTwits and Twitter requested, ALEX. I almost had this on my watch list anyway, so when you brought it up, I was like, perfect, I'll mention it here. Group strength, A, 31 out of 197. It's the 8th strongest stock out of 55 in that group. Composite rating, 93. Relative strength rating, 91. Had that nice pop. Was that on earnings? No, it wasn't on earnings. Must have been some news or something. But earnings per share of 400%, sales 21, after-tax margin 14. Fund ownership declined the last quarter. Kind of been steady around the 300 area there. Is ALEX. Let's do some measuring. 30% move. It's just not very fast, but good volume on the way up, consolidated, lower volume. I still think this has room to consolidate. Just because it's not a very fast mover, it doesn't surprise me if this shakes out and then sets up again, but holding great relative strength, break over that area could be buyable for ALEX. Let's go BC. Group strength D+, excuse me. What does this do? Manufacturers recreational marine products. Composite rating 91. Accumulation distribution C-. Let's see, 5 out of 21 in a weak group. Yeah, I want to be buying like very, very strong stocks. So relative strength rating is 76, kind of a cup, and then now it looked like cup and handle, broke out, failed, and now double bottom maybe through here. Good earnings per share number, good sales number, good after-tax margin number. Holding that 200-day simple moving average, but as a swing trader, I'm trying to get my money into the strongest stocks, especially in this weak market right now. So not one that I would personally trade, but I see why you brought it up. Kind of a double bottom going through right now. DEC, yeah, DEC got out today. This one's a monster as well. Earnings per share rating 99, group strength A, 17 out of 197, strongest of 8 stocks in that group. Composite rating 99, relative strength rating 93. Like I said, it was up 4.2% today on heavy volume. Let's see, earnings per share 32, 26, 107, 711. Sales 15, 15, 50, 78. You have acceleration of sales. That's good to see. After-tax profit margin 16, 24, 6, 9.5. Fund ownership increasing, but at a decreasing rate now, kind of stayed steady in June. Yeah, the time to buy this one was like today at the open. Let's see. Is there another pivot? Let me zoom out. Is this all-time high, basically? Yeah. So possible area would just be all-time high break. But if we can consolidate, that'd be better. I guess we have 3 daily highs right around the same price. This is one, like, if you bought, it's doing nothing wrong, and then you can hedge yourself with SQQQ or shorting the NASDAQ, anything like that. Great relative strength, great volume coming out here. I mean, doing all the right things if you own it already. DECK. Let's go DXG, no, GX, DXG. DGX, Quest Diagnostics. 71 out of 197 for the group. B, let's see, 2 out of 42, that's interesting. Fund ownership increasing, that's good to see. Composite rating 92, relative strength rating 85, a little bit weaker, but earnings per share numbers 145, 168, 300, 124. Sales all above 40, after-tax profit margin 20 to 15, but all positive there. Let's see, DGX. Let's find an entry point. Yeah, so we had a bit of a larger volume pullback, bounced at the 20-day moving average, only 5% down. Let's see, is this just a slower mover? Yeah, kind of a slower mover stock. Look at, like, this looks super clean. It's not going to give you any troubles, but all of this move was 26% when the very, very strong stocks, Upstart, they can move that in a couple days. And that's kind of what I like to focus on. But, I mean, if you like slower moving stocks, this is holding up great. Would like to see this consolidate just because it did have a little bit heavier selling volume through here. If we can allow that 20-day moving average to catch up, maybe a entry point comes in later. GPI, this has been on the watch list for a long time, but it just kind of keeps chopping sideways. Earnings per share rating 98, group strength D+, 147 out of 197. It's third strongest stock of that group, which is a good thing. Composite rating 93, relative strength rating 84 though, a little bit weaker on there. Earnings per share 131, 88, 236, 173, very strong. Sales -3, -4, 12, 74, so we're going to see some acceleration there. After-tax profit margin doing its thing. Let's see fund ownership on this one. Yeah, steadily increasing, kind of plateauing recently. And you can kind of see that because with fund ownership plateauing, this stock hasn't been exploding higher like it did in 2020. So we have this just consolidation area since March, not doing anything like too wrong, but today we opened right at the 50. It's showing after hours. I hate that it does that. But just not really doing much of anything right now. So not something that I want to focus on. Mttr. IPO cup kind of breaking out. Fund ownership increasing slightly. Let's see. What does this guy do? Digital platform design, hotels and such. All right. Accumulation distribution A-, that's good to see. Composite rating 53, just because it doesn't have any earnings or sales numbers really. Relative strength is picking up, which is good to see. What was the average volume on that? 2 million. Okay. Mttr. Yeah, this is like megaphoning out, right? So if you're using like tight stops, like I try to do in this market, you're gonna have to like zoom into the daily or the daily chart. Zoom into like an hourly chart or 15-minute chart, something like that, to try to find a lower risk entry point, and then keep your stop as tight as possible. So maybe here we just flag out at the beginning of the day, and then you buy some breakout, keep your stop at 2% or something in that range if you're going to trade it. Mttr. All right, let's see. What else do you guys want to see? HOG and IN. Let me start the right order. Got 2 more stocks to look at in the comment section. After that, we'll call it. So any more charts that you guys want to see, drop them in the comments. Make sure you subscribe and leave a like. It helps me out. So if you enjoyed the video at all, got anything out of it, just a quick click on that like button would help me out, and I'd appreciate it. All right, INMD, super strong. Earnings per share, 99. Group strength, A+, 9 out of 197. Strongest stock out of 69 stocks in that group. Accumulation distribution, A-. Composite, 99. Relative strength, 98. We had that flush candle yesterday, bounced right back up. Yeah, really strong. Earnings per share is accelerating, 26, 104. I'm writing this down. INMD, awesome one again. Let's see. Yeah, 26, 104, 130, 325. Sales, 49, 60, 62, 184. After-tax margin, 44, 53, 45, 50. What a monster fundamentally. Jeez. Fund ownership also increasing, 73 to 216. INMD. Did I type that right? Oh, I'm on the 15-minute chart. I was like, that doesn't look anything like what you just saw. Yeah, huge flush candle on heavy volume. That's definitely one thing scaring me away for now. Not that I don't want to take this trade ever, but with this much volatility, look at ATR jumping through the roof. Where are you going to put a 2% or 5% stop on this name? Give this some time to consolidate, but I mean, fundamentals, really, really strong. Fund ownership, group strength, doing all the right things. So if this can consolidate, we can find a tight area. Let's see. Yeah, if we could find a tight area, maybe on like a 15-minute candle chart, we could take a look at that one. INMD. Let's go HOG, Harley Davidson. Yeah, auto, like leisure products, 142 out of 97, so D+. On the back half, and relative strength rating 36, composite rating 51. I mean, in a market where only the very few stocks are worth buying right now, we have to be highly, highly selective. Stocks under their 200-day, under their 50-day, under their 20 and 8 week relative strength, I don't want to buy it. It's not something that I'm going to be buying. HOG. There's just better setups out there. You can see it's kind of forming that bear flag through here. If it comes up to the volume shelf, could be a good short opportunity to bring it back down here, if anything. But not something that I want to be trading. But as always, you guys can do what you like. UHAL. Yeah, this one, very, very thinly traded. I had this on a watch list a couple times because it looks really quality stock, but only daily average shares traded, 36,600. So if you get in with any position size, especially in this like kind of choppy, weak market that we're in, if a big seller comes in, you're gonna get annihilated on this. So any stocks under 100,000 shares daily volume, I've been staying away from. It's just not worth that kind of gap down in slippage risk that could happen. But composite rating, 2 out of 19 in the group. It's doing a lot of the right things. It's just too illiquid for me to swing trade with lower risk right now. Let's go Teladoc. Yeah, super weak stock. Relative strength 9. Group strength B+. Within the group, 26 out of 31. So, like, what's the strongest stock in the group? Let's check that. Relative strength. So, instead of DOCS, instead of Teladoc, check DOCS. Same group, but relative strength 97, composite rating 98, relative strength, 97, strongest in the group. But if you look at the weaker stock, Teladoc, that's selling off on high volume here. It's a relative strength rating of 9, a composite rating of 11. Just switch your focus. If you want to go shopping in that group, find the strongest stock. You can see funds are leaving the stock, not what you want to see. So instead of Teladoc, look at DOCS and try to find an entry point there. All right, what else? Let's see. EZFL. I don't see that on here. KTTA. Yeah. I don't know. You trade different stocks than I do. NASCAR all out. So good luck. I mean, there's definitely different ways to trade stocks. So I'm not saying one's better than the other. Just the way I trade, these are not the stocks that I'll be looking for. So if you guys don't have anything else, thank you for showing up to the live stream. Definitely trade risk first for the rest of the week. I mean, going back to that S&P 500 chart, we're definitely showing some weakness. Every time we gap up, we sell off during the day. So any new trades you're putting on likely are pulling back unless they're showing incredible relative strength, and that's what we wanted to focus on today. So I think that's going to be it. Thank you so much for showing up to the live stream. Leave a like if you enjoyed it. Subscribe to the channel. See you guys on Sunday morning for a breakout watch list for next week. And if you don't have a brokerage, you can sign up with Webull, get 2 free stocks, one between $3 and $300 when you sign up, and another between $8 and $2,000 when you deposit $5. I have a bunch of different brokerages. It's always good to have a couple different ones just in case one goes down during the day. So I have Webull. I trade with TD Ameritrade most often, but the Webull is my kind of like long-term growth account. All right, follow me on StockTwits and Twitter. That's where I post most often, but also on TikTok and Instagram. Have a great rest of your week, and thanks for tuning in.